Hello and welcome to this analysis. Now, in today's video, I've covered Union Bank of India. Union Bank of India, a public sector undertaking bank, is India's fifth largest bank. It has its revenue segment is mostly coming from corporate and wholesale at 36%. Retail gives its 34%, almost equally banched. Treasury 27%, and others are at 3% of it. It's deposit in terms of deposit. It has 6% market share of the Indian banking, and in terms of advance, 5.5%. That's a pretty high number in both cases. It has 8,466 branches across the country, and overseas, it has branches at London and at Dubai. uh, when the bank mergers were taking place, Andhra Bank and Corporation Bank were merged with it. So in the last 2 3 years, we see those banks staff and branches and all being clubbed together, and that's why the market share of Union Bank is gone up substantially because of that also. It has among its branches, 21% of its branches are in the metro area, 49% in urban, and 30% in rural India. Promoter holding is at 74.76%. That's the government of India. 7.37 is held by FIIs, 11.38 held by domestic institutions, while the public holds a very small 6.5% of the stock. Market cap of 1,01,778 crores with a return of equity of 15.6% and a last 5 year very healthy dividend payout of 22.9%. Its trailing 12-month PEG ratio is at 0.20 and a Pytrosky score of 6. In the last 5 years, the bank has seen a net profit CAGR at 46.5%, which is excellent, and the stock has also made it to the Benjamin Graham Value Screener stock. Now let's have a look at the charts and try to decode what could be lying ahead for it. Now this is a quarterly chart of it since its data available listing from 2003 onwards. Now we can see out here one very good move coming from its listing time in October to the 2010. Even in subprime, the stock did not crack much, but from there, from 2010, that's a 8 year move which gave away, and we have a 10-year decline in the stock, and that decline is quite steep. 10 years of a negative return stock, which let's see how much was that retracement equivalent to out here. So it's more than 88% out here, uh, in terms of adjustable charts in a log chart. So you can see deep retracement taking place, more than 88% in the stock. And ever since the COVID lows, we've seen a steady rise, breaking above this slanting trend line out here, now well above it, moving above it into a very very close to an Ichimoku bearish cloud, a very big Ichimoku cloud, which resulted in a pause in the trend. And in the last quarter, that is the April June quarter, we saw a decline coming, the red candle out there. And the new quarter, just the first month has been completed. The support in the case of the quarterly chart is as low as 95, and it's quite interesting if you notice that the previous level from where a lot of bounces were coming trying to stop was also near 80, and out here near 90, out here 90, sorry, out here. And that's where the Ichimoku baseline in the monthly is also holding currently. It was an attempt to break away, it was done in June, which failed. Then again in October 22, after a pause, massive breakout above that level of 90. So now big support sitting at 90. In case of a pullback, it is also at that trend line. Resistance in the quarterly chart is all the way up at 180, then 215, and then an 80h likelihood at 300 and more. Let's look at what the monthly chart is telling us. The monthly chart, yes, month of June was a pretty bad month. You can see prior to that also, if you look at April, the doji. May was a long lower shadow candle out there, and signs of some weakness were showing, exhaustion in the trend, not weakness, exhaustion were coming, with the monthly now resistance around 175, then 225, and all the way then to 300. Very good support in the monthly coming in at 100. And again out here, if you could see the emphasis of what I was saying, that this is that level of 90, where each time the stock did try to stop the fall in the downtrend once again out here. And here you can see the stock trying to break above it and fail to go above it. Here again trying to break above it, fail to go above it. So now this level becomes a very very strong potential support level for the stock going, in case there is a bigger pullback taking place between 75 to 90. But before that, the monthly cloud support and the baseline support is there at 100. Let's look at the weekly charts. The weekly chart has seen a break of the baseline and quite a few candles sustaining below it. This is a sharp candle. This was the election result candle. After that, even though the decline was not sharp, but upward momentum, not just in Union Bank, in other PSU banks, as also appears to have come to a halt right now. And again, we see tiny bodies in the candlestick forming, so not much uh, movement being seen out here, coming very close to a weekly Ichimoku cloud support of 125. If that does not hold, then probably comes down to 110 to this fractal out here at 90. So 100 for a immediate short term point of view, month or so for the set month of August, would like to see how it manages at 125 odd levels. Let's have a look at the daily time frame. In the daily time frame, you can see, yes, this is a clear that this was a June 4th candle. After that, the recovery has been poor, and it's continuously trying to hold on to this 125-28 level non-stop. Attempt has been there out there. You can see prior to the June election results, one in May, again in 4th June, then again in 8th July, then again the budget date 23rd July. So each time, so this is a very crucial level, 128 in the daily, 125, 23 in the weekly chart, because below that the fall could be a bit steep as discussed in the weekly chart out here. Where is the resistance for the daily? The daily resistance initial rise at 138, but a very big one now formation at 145. Only if it starts sustaining above 145 to 155 will the stock see some strong upward momentum happening. Otherwise, it could be very sluggish. Even in the weekly, we can see 145 as a resistance out there. Now, what would I be doing as a strategy? Before that, a disclaimer: this is not a trading or investing advice to you. This video is purely educational based on the study of Ichimoku. Whatever decisions you take, please do your research thoroughly. Mark your risk levels, and always manage your risk properly. Now, what would I be doing? I would be carefully looking at this level of 123, 125. If it fails to hold, I would look for a downward entry in the stock near 110, between 110 to 190. That would be my accumulation zone. Would not like to go all out aggressive at one particular level. Will not try to do a bottom fishing in the stock, like exactly at a bottom and then pick it up. Would rather look to accumulate, because the overall picture as per Ichimoku for the stock looks excellent, and has looks like something which will even, maybe a longer period of consolidation till 110 to 90 odd levels. So more aggressive if it comes to 90, but accumulation I would start from 110 onwards, and as it dips more I would try to pick more quantity. On that way I would be looking for upsides in the stock, like I discussed in the quarterly chart. Also, my from a trading point of view I would be looking at something like 185 to 200, and from an investing point of view I would be looking for an ATH around 325 to 350 is what I would be looking for. Hence, not going aggressive in the stock, but definitely keep these levels in mind. It would be a super duper buy if it comes to that level. And of course, if it supposing starts moving above 125 from here onwards, it holds 125 and a rally resumes, then too for me a momentum aggressive buying, I don't see it happening before 145, 155, only above that. Otherwise it would be just a short term trading bounce, uh, in a bounce range. So that I would look for opportunities like that in the stock. I hope this video is of help to you, and so please do like it, share it, and do follow me for regular stock ideas and updates. Until then, happy investing.